Hi, I'm Jim Jubeck, and welcome to my YouTube video for September 28th. It's fall, and I can tell this because I'm congested. I have very allergic to ragweed, which is blooming all over the place right now. But I also know it's fall because the end of the baseball season is here. We're getting our last peaches crop. The transition is full underway, but weather is still here, glorious in New York, so let's keep it that way for a few more days. Okay, if you like this video, please give us a thumbs up, subscribe to my YouTube channel. That way you get notification of when we do the next one. We do about 3 a week, not always on the same day. If you want more of my stuff, you can go to my free site, that's jubeckpicks.com, link down below. It's got 3 portfolios, and then there's also my paid site, jubeckam.com, that does some options and some inverse ETFs and some ETFs, things that are fairly appropriate to this market, and you see links to all that down below. Okay, here's the topic for today. And it's gradually dawned on me that while I've been very pessimistic, I might not have been pessimistic enough about this market. So, title today is From Bear Market to Global Financial Crisis. We're not yet in a global financial crisis, but we can see the signs of it. We can see it in volatility in the currency markets. We can see it in the decline of pretty much everything against the dollar. The yuan is down, the yen is down, the euro is down, the pound is down, and they're down multiple year lows. We're starting to see some of this work its way through economies, like the World Bank lowered its growth estimate for the Chinese economy. The Eurozone looks like it's in a recession. Global inflation is up because of food and energy. And what really starts to show up first, I think, in a kind of concerted way that looks different than the bear market in the United States, is what's going on in emerging markets. So let's look at a couple of ETFs that track those markets. The first one is the iShares MSCI, that's Morgan Stanley Capital, Emerging Markets ETF, that's EEM. And you notice this is what interests me, is here at the end, starting around, maybe the middle of August, we're seeing this down, and then we get a big acceleration to the downside, starting around September 12th and going on to date. If we look at an ETF for India, which was rallying until around that same time, until September 12th. Then we see a big plunge there. South Korea, which we normally don't think of as being necessarily an emerging market, but it's still got some of the same characteristics. That's actually been down since the middle of August. What all these countries have, what these countries and emerging markets in general have in common as a problem, is that many of them rely on inflows of foreign capital to balance their books, that they have a negative account balance. India, for example, does. South Korea can, depending on how much exports are doing. Countries like Turkey, all these countries really need that kind of inflow. And if people with dollars are starting to say, well, I think this is a little risky, I'm going to keep my dollar at home, it starts to present a problem for these countries, for their companies who raised debt denominated in dollars, because that's the easiest way to do it in many cases, and that dollar has become more expensive to pay back. So all this is really sort of starting to percolate upwards. I think we're at the stage that frequently happens. It's called Whac-a-Mole. And what we're seeing right now is not so much a completely articulated trend, but isolated incidents that will add up to a trend if we keep going in this direction. So it's like, problem in India, bump. Problem in Korea, bump. Problem in the Philippines, which depends upon remittances from overseas workers to balance its accounts, bump. All these things, right now we look like we're moving from country crisis to country crisis, but the overall trend, I think, is to merge these crises into something that looks like a global crisis. South Asia might be a good place for this to begin. India, Vietnam, and then sort of up into South Korea. But it's certainly something to watch. The market is already nervous. This would make it more nervous. So thanks for watching. This has been Jim Jubeck. If you like this video, please like it. Give us a thumbs up on YouTube. Subscribe to my YouTube channel. That way you get notification when we do the next one. You want more of my stuff, you can go to my free site, gbagpicks.com. It's got 3 portfolios. In this market, I would urge you to subscribe to gbagam.com, which has volatility tools, as well as ETFs and reverse ETFs. Recently, I added a reverse ETF on the EEM Emerging Markets ETF, that's EUM, and that's done, I recommended that in February, and it's about 15% to date. So some of that stuff shows up in the paid site. Reason to subscribe. Thanks very much for watching. See you next time.